we start? Yeah. As we all know that the dealership business is capital intensive and availability of funds can make or break a dealership. For many years, we have depended on traditional sources of funds like bank guarantees, inventory funding from banks and financiers, etc. But it's only off late that that couple of IPOs that we have seen have shown us an alternate way of funding. The auto industry has discovered private equity and IPO as this alternate. In today's panel discussion, we will discuss what it entails to capitalize on these sources. Thank you, Aaditya. Thank you, Suraj, for being a part of this panel. So, Aaditya, if you don't mind my asking you the first question.
Sure, please.
What are the key checkpoints for a dealership to be IPO ready?
I think in terms of for any public market activity, one of the key things is how clear you are in terms of your outward disposition. So in terms of your financials, in terms of who your auditors are, having a second line of team in terms of beyond the promoters, all of those things become very, very important when you are embarking on the IPO journey. Secondly, other very important point is the scale. So one has to have scale. And third, I would say, would be some sort of a differentiation apart from your other peers. So someone might be on service side, someone may have greater intensity, someone may have a larger used car vertical, someone may have a larger technology play, someone might have a multi-brand kind of a play. So you'll need some sort of a differentiation apart from which sets you apart from your other peers in the industry for you to be able to embark on that journey.
Thank you. Suraj, what I would like to ask you is, can private equity become one of the stepping stones to a successful IPO?
Sure. Hi. Good evening, everyone. Thanks for having me. And let's look at private equity as a shop who has capital. They are also in the business of investing, right? And they want to invest in businesses that can scale, grow, and earn profit, right? It's as simple as that. Now, retail generally, and I'll come to auto retail, is generally the king of India, right? There's consumer, and you guys from an auto sector control the customer, which private equity has a mindset like, right? Auto companies kitne bhi gaadi banate rahe, sell aap hi ke through hona hai. So that's the edge that any sort of, customer touch point business has. Now, how can you best sort of portray to them the value in terms of your OEM relationships, in terms of your after sale, in terms of how you deal with customers? And I said, right, most people, I think here are family businesses in this sector. How well are you organized, right? Because I'm sure, and I sort of keep bringing Hindi in the middle, that daily mein hum wo daily basad mein lage rehte hain. We don't give enough attention to the important things, which is important to an investor coming from the outside, who wants to see you are compliant, your attitude towards information, how you look at it, how you analyze your own business, because they are looking for all of that. So once that is there, I think the sector is interesting enough for any investor, because it's interesting enough for all of you in this business, right? It makes money. That's why such a big, FADA or everyone in this room also, right? So if it's meaningful for you, it will be meaningful for an investor to piggyback on you to make money. I would say that.
Okay.
Sorry, FADA.
Another question to you, Aaditya, is that I think a lot of dealers wonder about their valuation. They wonder what is the valuation that they can get, what is their exact value, how do they approach this, how do they get answers to these kind of questions?
So I think a very ready answer for this is slightly different, because each business has its own nuances. Each business has its own kinks, as Suraj was mentioning. So they will be valued also similarly differently. So like I said, if the more layers of moats you add to your business, right? If you add a technology angle which is robust, you add a service angle which is robust, you add a multi-brand angle to it. So each of these pieces make your businesses stronger and likable for an investor. And that is where the multiples also become slightly different for different dealerships. So now, thankfully, we have two decent size, good size dealerships which are listed, and one slightly smaller dealership which is listed on the main board. I'm not talking about the SME space. So there are benchmarks which people can use to evaluate their own their valuations accordingly on those light. But some of these nuances also is important from a public market investor perspective.
Suraj, yes, IPO is big money and all of that, but besides that, it also has its potential risks and challenges. Can you dwell on that a little bit for everyone here?
I think anything that is profitable will come with risk. You've been it through yourself, and a lot of companies, if I ask you that would you ever help another company go IPO, you would have said, I've done it once, it's too much of. So one, it is effort, right? It is, the risk is in investing before getting the funds in your systems procedures, in your ERPs, in your talent, bringing external people, bringing independent boards. There's reluctance generally to incur that because you want to say that first, if there's money, I'll do that. But IPO sort of accelerates your cost towards all of these things. And there are chances that even after do that, you may not be able to time the market always well, right? That you've done all of it, but the market changes, trends change, your OEM slows down, you have some relationship issue, etc. But still that cost is there, which I think is the first major risk factor. It's not a less cost, it's a reasonably significant amount. It would add value, efficiency to your business any which ways, but that is one potential risk which sort of people are reluctant to do. After you list is, we were talking about that, right? It's all about accountability. You've taken someone else's money and this is public. Private investors still easy. You have one person, you can sit in the room and figure and, close a deal. But when you're dealing with public at large, your accountability is even larger and there is a regulator overseeing that accountability. And this is a regulator who just wouldn't wrap your knuckles, right? This is a regulator who can get really nasty if you miss on what your obligations are to, in terms of related party transactions, in terms of other issues on how as promoters you sort of conduct your affairs with the company. So those are things, as I said, they are not challenges. You just have to be mindful of that, plan that better and navigate through it with the effort pre. I don't know, Aaditya, if you want to add something to that.
Sure, I think very well articulated, Suraj, but I think the way I look at it is obviously there are risks, but if you are transparent, the upside of being listed for any business, whether it's a dealership or any other business, is lot more in terms of your access to talent, in terms of being able to create your stock as a currency for future consolidation, taking over any other business or any other dealerships. So it creates a currency for you. So, but like Suraj mentioned, you have to be more accountable, you have to be more transparent. Your stock prices can be up and down depending upon how the market and the industry is doing. But I think those are a lot more manageable than the upside that you get out of being listed.
Would you want to also talk about the compliances and everything that an IPO or a listed company faces?
Yeah, so I think obviously listing has to be an objective after you reach a certain scale and size. Otherwise, there is significant compliances with respect to your quarterly filings of accounts. There is an expectation from public market investors that you'll do investor conferences, attend investor conferences, do your quarterly con calls. So, and then you have to have that, a larger independent board. So there are multiple levels of compliances which are required, and obviously they come at a certain cost. So all this makes sense once you reach a certain scale, size, in terms of overall business.
So are you saying that as an auto dealer, every month you have the OEMs calling you and asking you what you've done, and then every 3 months you have the investors calling you and asking you what you have done?
Absolutely, absolutely. And auto dealer will probably just push a few more cars down your throat. These guys will ram your stock price down.
Yes. And would you both also like to talk about how we can mitigate these kind of risks?
I mean, again, risk, overly using of that word is sort of, I would feel we should say these are process issues to navigate. There is challenges, there's like compliance, as I said, most of you all run private companies in dealership, I understand. Year-end resolutions will become live resolutions, there'll be disclosures, there'll be, those kind of things. With the right investment in team, I would say people who have had some flavor of experience of being listed, working with entities that are listed, what it takes, and technology, which is not expensive anymore, right? I'm sure you saw a lot of sessions today on technology around your business. Even technology for compliance has come up, and it's just getting the right mindset to say, karna hai, we will do it, we will follow it. And not try to be cute with, as I said, public markets, right? This is not something that you want to mess with, because we've seen promoters who've taken advantage of markets have never. I know a family who's been, in a business for 40 years, and if they've reached X market cap, they just believe that they've lost the opportunity, right? Just because they were cute with markets in terms of managing their share price or misreporting and stuff like that. So this is a very unforgiving space. People will not allow you to sort of come back ever again if you sort of miss this. So getting that mindset to say that it's not an exit event. It is not you're selling your business. You'll still be in control. You'll still be driving seat. People are putting money hoping that you grow, right? So they're sort of backing you, and not like, it's an event where you've raised money, but for yourself and your company to grow, which is what public shareholders or even funds, when I'm saying, are looking for. And you have to sort of run with that baton now, that I'm managing someone else's money to deliver.
As a country, we are at a great space. I mean, we've never had this kind of a liquidity which has been chasing good businesses, and not only large businesses, mid-sized businesses are also finding multiple avenues to get funded. I think, especially the space you guys are in, that has seen the largest IPO the country has ever seen, Hyundai, right? So that is the largest IPO that an auto guy has done. Similarly, in the autocom space also, we have more than 2.5, 3 dozen companies which are listed. So I'm sure as we move along as a country and people start buying more expensive cars and more cars per capita, we'll see a lot more dealerships which are going to get listed. So it's important that we start, lot of us sitting here start thinking in those lines in terms of what needs to be done, both in terms of scale, size, and creating a business environment within the firm to in tune with that.
So going back on IPO readiness, if my dealer friends here want to know, I mean, if there was like a kind of a checklist that they could make and tick box against that, okay, fine, do I comply with these things? Does this make me IPO ready? Could you give some pointers or a checklist that they can do a self-check on?
Well, so I think if I have to give 4-5 very, very short points, I think one obviously will be scale. Second would be the team, the professional team that you have. Third is, like I mentioned earlier, a differentiator in terms of what is it as a dealer, because there are so many dealers, unless you're different, there's a differentiated story. It becomes a slightly more difficult job to get attention of a public market investor for a story. So I think and obviously the team. So if these 4-5 things are in place, I think one can look at moving in that direction. Suraj.
Yeah, and to add to that, as I said, right, what I think Aditya is trying to say is your storyline has to be most important and consistent. Plus, maybe a little more tangible is that you need your right set of books to be in place, which sort of start showing correct profits, and not just in the year, but maybe in the prep years as well. As family-run businesses, we all know that the bottom line is adjusted because we want to pay less taxes or do other things with it. That all has to stop, right? Because every rupee of tax saved is into 15, 20 times lost on valuation, right? So that hygiene has to start happening from a period prior. If your showrooms are owned, let's say, by related parties, or if there are transactions which are not on, let's say, fair principles, arm's length, or not backed by the right contracts also, because when there's a law firm or a advisor coming in, they're going to really look at very, very deeply on your contractual obligations, because all that will then get listed as risk factors, get listed as things which at least the sophisticated investors who are going to be your anchor or your primary sort of things will look at deeply. Retail may not look at, right? Retail don't even look at your car manual. They don't look at the DRHP. We also don't look, but your anchor guys, the people who are going to really help sail through that IPO are going to be very, very critical on some of these things in terms of bookkeeping, accounting, compliance, disclosure at a very large family level also, right? Doesn't stop at just people owning it. You have to be careful with whatever you're doing outside the dealership also. And if you have issues there, that will get disclosed in your DRHP for this auto retail business as well, right? So all of that has to fall in place. I would feel it's a 1-2 year journey. It's not that you hire Aaditya or someone today and you say that IPO. It is a journey that you prep, and then you sort of go and hit the markets.
So you are saying that financial prudence is a must. No more maintaining 3 books of accounts, one for the OE, one for the financier, and one actually for the chartered accountant.
Yeah, and I don't think your kids are anyways going to handle it, right? So look at it this way. If you give them 3 sets of books, they're not going to run your business. They're going to run away. Maybe you could have managed it. So that simplicity, even the family needs, and now even the markets need and stuff like that, right? No one can deal with complex structured, layered holdings, part business done here, some cash accounting, right? It's common. I'm not saying there's wrong in it. Lifestyle businesses are great in the country. A lot of people are growing richer with lifestyle businesses. You're getting into an accountable business, which is scale and growth and, integrity led, not so much lifestyle led.
And to be honest, not all businesses need to be listed. You could be a great business and not be listed, right? So it's not something which is some sort of a holy grail which every business has to aspire for.
Like we are sitting in a property which is not listed. There's nothing wrong in it.
Yes. And what are the other benefits of being a public limited company other than funds, in specifically to the auto dealership space that you can think of?
I think talent is one big thing. People get attracted to whatever is visible, known. You are able to incentivize employees really with a liquid stock, right? So there is some wealth creation possibility there. Visibility, even your customers will tend to start feel more that you're not, the fly-by-night sort of operator, dealer, if at all for some smaller ones. So I would feel these are a lot of qualitative visibility things. It all becomes better, right? Because every time you make a investor meet or you do a road show, you even send your results out. It's all there digitally, right? Someone is looking at it and it's increasing your digital presence, your identity, your awareness. It institutionalizes the business. So again, because this is a family-run business, IPO will institutionalize it mandatorily, right? You will have to bring professionals, you'll have to bring independent boards. So it also will bring longevity. It's not that you are driving it today and you are not around and then suddenly the family doesn't know anything about it. So it will systemize, institutionalize the business is what I think is the big benefit.
And immediately, because it's like a capital intensive business, immediately your cost of borrowing will also most likely go down because your debt equity improves. There is a greater value which is easier to ascribe to your business because there's a visible market cap which is there. So typically your credit rating will get enhanced, your cost of borrowing will also come down, and then there is another vehicle of loan against shares or those kind of stuff which also opens up as a funding source from banks as well.
Thank you. We are good to go for questions if you have any. Any questions here?
I think Garima is best placed to answer that, so I'll leave that for Garima.
Yeah, so the way I can tell you what we did create a holding company, and then all the other companies became the subsidiaries of that company. That is the kind of structure that we created.
What is the role of the OEMs in this?
You have to take a sign off from every OEM that you work with.
And because there are many OEMs who are not comfortable with this, so
Yes.
What is your indication of the future of this? Is this going to change?
I think that part comes in the prep period, where we create comfort for the OEMs to know that we as people will not change just by becoming public, right? Our commitments to the brands will stay the way it was, and the only thing that will happen is that we will have better financial, we'll have better funds available to do the business better. That is the only reason. But as far as on-ground business is concerned, we will not change the game at all. If at all, we'll up the ante, but we will not create any kind of distress for the OEMs. That is the comfort that you have to build in over the years, and I call it the prep period for a successful IPO.
Ma'am, how much is the cost is coming if we bring the IPO percentage wise?
So typically it is a function also of IPO size, but for about 1,000 crore issuance, these days the cost is about 6%. If your size is slightly lesser, say 500 crores, it might be 7.5%, but broadly that ballpark.
Yeah, including the investor cost also. We have those who are investing the money, we have to pay the extra, or they will just invest our shares?
No, sir. That is a different business. We don't do that. No, you don't have to pay the investor to invest.
No, there will be inflations and
So that is a different business, I think.
speculation business. Yeah.
No. Yeah, it could be either PAT or EV EBITDA. These are the two metrics. But predominantly because most of the businesses. So basically, the way to look at it is if it's a mature business, it's typically done on PE. If it's a very high growth business, then it's done on EV EBITDA. Broadly, if I have to put it very, very it can, so it's a very difficult answer to give like that. But
range I wanted to understand.
And it is typically done on a 1 year forward basis. But my sense is for your kind of a business, it should be somewhere in high teens of PAT multiple. High teens, 15 to 18 times or something like that. So depending upon obviously scale, size, there are a lot of factors. I mean, it's very difficult to give one number to a business like this because all business is different in spite of being in the same industry.
What is the ideal prep time that one should look at?
Sir, depend karta hai in terms of where you are right now. If you are already doing a lot of things right, probably the prep time for you could be 6 months. If there are a lot of putting the house in order kind of a thing is required and last couple of years financials don't show the real business numbers for your actual business, then that number could be even north of 2 years. Because your 3 years financials go in the DRHP, so there has to be a diligenceable 3 years numbers which is available when you are going to the market. Sir, so in terms of IPO prep, sir, the DRHP is typically a 500-600 page document, right? And a very detailed one at that. So in terms of disclosures, you have to put everything, including when the company was born, how the capital build-up happened, litigation, promoters' background, promoters' extended families and all. So and each thing has to be backed up. And then post-listing, there are compliances with respect to quarterly financials and all. So there are quite a bit of financials. We can maybe take it over a cup of tea after the session. Otherwise, it's become kind of a lengthy discussion. No, you're putting me on a spot, sir. Sir, that is, I'm just giving a thumb rule kind of a number, but a lot of other factors also need to be. Like I said, not all companies are IPO-able.
Let me handle this, Aaditya. So when we start a dealership, the ROS promised to us is approximately 2%. Do we all get 2%? So this is how valuation is also. It's a benchmark figure, but it totally depends on your own business and your own business capability, how you build it up.
Can you explain the difference between the SME and the main board? That is what I wanted to ask. How do you differ on that? How do you, and what is the kind of fundraise that happens in each of them? How do you choose where to focus on, SME or the?
So I am not a practitioner of SME IPO, to be honest. So my knowledge is probably pretty much similar to a lot of you guys, or probably you guys would have explored, a lot of you might have explored, so you might actually know more than I do. But the kind of investor set which is there in SME IPOs versus a public market main board IPO is very, very different. In public market IPOs, you get a lot more institutional investors, you have the large mutual funds, you have global FIIs and all who are coming in. And some of those investors that we work with are not even entitled to work in SME IPO, predominantly because of liquidity issue. Agar these guys want to buy a stock worth 30 crores, 40 crores, 50 crores, probably it will be difficult for them to do it in a SME listed space where market caps are probably anywhere between 100 to 500 crores. So there the universe is more bank treasury, family offices, HNIs. So that is a very different kind of a selling. If someone is looking to make his stock as a currency, my general recommendation is that you should look to do a main board issuance, even if it's a 400-500 crore issuance. Anything less than 400-500 crore IPO in a main board these days is becoming a little tougher. And this I'm talking about IPO size, not valuation, huh? 400-500 crores.
So if we say a 500 crore IPO size, and if you look at a dilution of say 25%, then you're looking at least a valuation of about 2,000 crores. If we look at even a 20 times valuation, you're looking at a PAT of above 100 crores. So below that figure, it really doesn't make sense to go for an IPO. Would that be a fair comment?
I think your maths is on the point, sir. So I think 100 crore PAT or thereabouts is a good benchmark to work with from a main board IPO ability perspective. Even main board does not have any restriction regulatorily that way. It's just the kind of investor pool, because as we speak, there are about 100 IPOs which are filed with SEBI. So getting interest from large institutional investors for a company with market cap less than 1,000 crores becomes a lot more tougher.
So each one of us is very inquisitive because we've heard of a Delhi dealer going in for IPO that all of us have read. So everyone is more interested in on hearing about that story from you.
So, sir, some people are resourceful, some are not.
No, and I think nothing against him. It's human greed. If you look at it, his disclosures were okay. He was raising 12 crores. 4,000 crores bids coming is greed of people like us who were saying we want to ride SME. It's like betting, right? Almost like on anything that, because everything was hitting, right? At that time that you got allotment, everything was hitting. So I don't blame the guy. I mean, his disclosures are okay that he had 2 showrooms and only those many sales. So disclosures were fine. That stock till trade, we were just looking at, it's about 16 crore market cap today. So it was meant to end insignificant, but he raised his funding maybe from 2 dealerships of bikes. He would have 4 now, wherever the gentleman. But that 4,000 crore bids coming in is marketing, or I just say greed, right? People are feeling that auto sector IPO kuch aaya hai, resourceful hai, naam acha hai. You know, that is the kind of marketing that was happening. And even today, right? Some of you all will talk about some stock and we'll go home and everyone will buy on Monday, right? That's the era in which we are living in. No one wants to diligence, right, per se. If today Aaditya says a stock about anything, right, they do so much listed company, right? Would you bother diligence? I think that's an outlier case. But yeah, I would say that SME as a avenue, as a window, still there is, because people have made money, they're coming back for more. And if your company is not the 100 crore PAT, if it is a 20 crore PAT also, there are fair chances that you'll get a 200 crore value there. You can dilute whatever 30% there, get the money and, you know, become that little bigger boy to then eventually migrate to main board and all. It will both ease out your costs and also make you relevant in the kind of stocks that you would stand in, right? You don't want to be an insignificant stock on the main board, which, you know, like we all wouldn't buy main board stocks less than 500 crore market cap, right? But we might still look at SME, good promoters, good opportunities. So as a channel, I would feel that you should look at it quite seriously. Because
we are in fact, all of us in the deep inside our minds, we are very proud about him. He's a torch bearer for us.
Absolutely.
No, and I think from a liquidity perspective, one should look at other opportunities also. Private equity is a legitimate opportunity, or even, I mean, I know we all get very emotionally involved with our businesses and all, But I'm sure the industry will see a lot of consolidation also. So there is no harm in creating liquidity that way also. So I think one should be reasonable about where they are and look at all sorts of opportunities, whether it's SME, main board, PE, or a strategic for that matter.
And you are a derivative of the main OEM, right? So if OEMs will do well, auto dealers have to do well, right? They can't do well in isolation without you guys doing well. Let's look at that way, because sales and service both are needed, right? You know, what is delivered through you. So if there is a country view on auto sector, right? We just say IT, auto are our sort of flagship sectors. Then auto retail has to kind of piggyback on that journey and can't be left out. There is no chance that, auto OEM can grow without auto retail.
And auto retail has become very capital intensive. So that's the reason why everybody is prodding over all different kinds of possibilities.
I mean, yeah, so there is that uniqueness of your business that you need to fund inventory, you need to get debt, and your sales velocity sometimes is seasonal, sometimes depends on issues behind your OEM, right? You might have a customer, but the deliveries are not coming through. So if that seasonality and the high capex can be dealt with the asset light, more servicing, a lot of international companies that I, at least before coming here, not that I'm an expert, I read about, I've got into a lot of other revenues on financing side, on doing more with your physical establishment and customer touch points, where you start building fee-based revenue, which is recurring, or mortgage and stuff like that, or financing. That will keep your cash flows coming through, and the capex is a necessary part to fund the inventory. You'll always have that issue. But if you're able to predict demand better, that's why I'm saying you are at that touch point where you are also predicting demand and communicating back to your OEM, right? They are planning their production cycles versus the feedback that you are giving. So if that can also help you plan, while they'll make those calls every month to push more inventory, you have to sort of plan your own investments, right? Where do you want your money to get stuck, and how long can you manage with that? That will define, and that's why some dealers will be successful, some may not, who may be slightly more casual about money they're locking into inventory or capex.
So before we close the session, I would only like to say one thing. Before you think of going public or having an IPO, do think about the purpose. If your purpose is to exit, please don't even go there. Nobody wants to put their money on someone who wants to leave his business and go home happy and sleep. This route is only for those people who want to grow and want to work harder, at least 10x harder than they've ever worked. This is my little last bit to all of you. Thank you.
I think this was possibly the most engaging discussion, the last one. Please stay back for taking the mementos.